Good morning, everyone. Thanks for joining us for the Prophecy International 2024 AGM. Tim Dorman here from NWR. Thanks for joining us. I'll pass you across to Ed Reynolds, the Chairman of Prophecy International, to kick off proceedings. Go ahead, Ed.
Tim, thank you for that. And good morning to all from myself. My name is Ed Reynolds, your Chairman, and I'll be the Chair for the meeting today. It's now just ticked past 10 a.m. in Adelaide. So thank you all for attending Prophecy's 2024 Annual General Meeting. I've confirmed with our Company Secretary that a quorum of members is present, and I accordingly declare this AGM open. We have on the screen my fellow directors, Leanne Challens, Grant Miles and Matthew Michaelwitz. Grant Miles is also our Company Secretary. And of course, we've got our CEO, Brad Thomas, with us as well. And from Grant Thornton, our auditors, Adam Aladdin. Right, today's sequence of events. We'll first have a short presentation on our company operations, and then I'll conduct all the formal procedure to attend to the 4 resolutions for this meeting. I'll just run through a few things to start with so everyone knows how to operate various things on their screen. So today's meeting is being held online via the Zoom platform. Clearly, this allows shareholders, proxies and guests to attend the meeting virtually from anywhere, which is always useful. All attendees can watch a live webcast of the meeting. In addition, shareholders and proxies have the ability to ask questions and submit votes if they haven't already done so. So in order for the shareholders and proxy holders to vote at the meeting, if you intend to do so, you'll need to log into the Computershare online platform. So that's just come up on the screen, the details of that. So anyone who's entitled to vote at today's meeting and hasn't voted, you can log in according to these instructions. You'll get yourself to the online voting portal, and the details are there on the screen. Now, during the course of the meeting, questions from shareholders and proxy holders can be submitted at any time during the meeting. To ask a question, just please use the chat icon at the bottom of your webinar screen and type your question, then press enter. I'll just ask you to identify yourself either as a shareholder or a guest, and also verbal questions can be raised as well during the course of the meeting. So please note that while you can submit questions from now, they won't be addressed until the relevant time in the meeting. So the questions will be moderated, and if there's multiple questions on the one topic, they'll get amalgamated. If we can't deal with the questions for any particular reason, we'll ensure that we'll get information to people as we go along. So I encourage those there to submit questions as early as possible, and they'll be checked by Grant Miles, and he will introduce the questions at the appropriate time. Just quickly on the voting procedure, voting is conducted by way of a poll on each item of business. In order to provide you enough time to vote, I'll shortly open voting for all resolutions. If you're eligible to vote at this meeting, a vote icon will appear on the top of your screen and will bring up a list of resolutions and present you with voting options. To cast your vote, simply select one of the voting options. There is no need to press or submit or to press a submit or enter button, as the vote is automatically recorded. You do have the ability to change your vote up until the time I declare voting closed. So I now declare voting open on all items of business. Please submit your votes at any time. I'll provide ample notice prior to the close of voting. Shareholders will be reminded the board strongly recommends that you vote for all the resolutions. And we will have Justin Edwards of Computershare Investor Services to be the returning officer and to conduct the poll. So proxies have been received from 50 members representing 34.93% of the company's voting shares, and these will get reported to the ASX later in the day. Okay, that's all for the introduction. So I'll now hand over to Brad Thomas to give his review. Brad?
Thanks, Ed. Much appreciated. Looking at the participants that we've got online, I think many of you have already seen, this presentation a number of times from me. There'll be a few important updates, but looking forward to sharing the great success we had in financial year 24 again. So for those that aren't aware or are perhaps new to the Prophecy story, we're a pure play software business. We build software for medium to large corporates and governments, and we sell that globally through a number of different operations. We have operations in Adelaide and Sydney in Australia. We have a subsidiary in the Philippines in Manila. We also have subsidiaries in the US and the UK, mostly for sales. And about 85% of our revenue comes from international markets. And not this year, but last year we were the Austrade Exporter of the Year co-winners with Audinate. Unfortunately, we didn't win in 24, but we're very proud of the success we've had internationally over many years. From a company perspective, from a registered perspective, we're very pleased to have very strong institutional support. About a third of our register is held by institutions, about a third by insiders, either current or former executives or directors of the business, and about a third is retail. And those ratios stay fairly consistent with some small changes. And the business has been operating for a very long time in Australia, but has undergone significant change in the last 6 or 7 years. And there's a few things that we should call out on this timeline. And I think from 22, 23 and 24, we have continued to grow our top line revenue. And for the last 3 years in a row, we have achieved record revenue for the group. And we continue to release new and exciting software, and we also continue to attract some of the largest customers and partners and government agencies in the world to using our software, both direct and through our extensive range of strategic partners around the world. So in financial year 24, we had a terrific year. Again, we saw record revenue from the group, up over 22 million. We grew ARR very substantially across the group. We increased the percentage of recurring revenue of our overall revenue, and both Snare and Emite won very significant new customers globally for the business. And looking forward into financial year 25, we have a very strong pipeline, and we're expecting a solid result again this year. And on the back of, again, some very interesting partnerships that we've not only already acquired, but some that are in the pipeline that obviously we can't say too much about at this point, but scaling through partnerships is definitely one of our core strategies, and we're looking forward to more success with that this year. I won't spend too much time on these numbers because these have been released previously and have been in market for some time, but I'm happy to take questions at the end on the financial year 24 performance. One of the things we did have to do earlier this year, about a month ago, is we corrected some of our what we call contracted ARR, which is the leading indicator for the number of contracts that we have acquired from customers, and the ARR or the recurring revenue estimates coming from those customers, either committed or estimated. And unfortunately, over a number of years, we had some errors creep into a number of our systems, which were primarily manual systems and manual reporting. Now, this is important to outline that this is a lead indicator and is unaudited. It's not an audited figure. There have been no changes to any of our audited numbers, and I'm sure our auditors can attest to that if required. But this lead indicator of contracted ARR did require some adjustment, and we reported that to the market simply a few weeks ago. I'm sure there'll be questions on that at the end, and we'll be happy to address them at that point. I think the important thing to remember is even after you make the adjustments for financial year 24, there was still around 30% year-on-year growth, even across those adjusted numbers. The other question that you're going to have is, what are we doing about improving our reporting? And it was, in fact, we'd already started on this process, and it was the start of this process that really highlighted some of the errors that had crept into the reporting over the years for this metric, this leading indicator. And as we were looking at implementing, a better billing, contract management, and reporting platform, that's how these things were discovered. And we have already entered into an agreement with Maxio to deploy a new platform which will connect with both our multiple general ledgers that we have in the business, as well as our CRM and other business systems that will enable us to much more cleanly measure both contracted ARR as well as actual ARR and churn and other important business metrics, which are almost impossible for us to measure on a consistent basis, because those processes are still quite manual at this point. So we're taking very concrete steps. We're already starting a process of implementing this new software, which will, over the course of the next 3 to 6 months, give us much improved reporting around these important metrics. I'll quickly talk about the financial highlights. As I said, we went from 19.6 to 22.9 million in financial year 24. That's 17% top line revenue increase. Some of the important other numbers were, invoicing was up. We had cash flow break even. We remained debt free, and our deferred income or income advance also increased very substantially. I think generally, across the business, we held expenses incredibly well, apart from one area, which was in our hosting costs. That comes into the telecommunications and subscriptions in our expenses. And we're already taking concrete action through some architectural changes to the eMight application to decrease some of the COGS costs for that platform and to give us a much better percentage of gross margin for eMight going forward. Importantly, it also enables us to very substantially scale the eMight platform. It will be easier to deploy again. We'll be able to handle even larger customers and larger volumes of data. And these are important changes for us to be able to address larger and larger customers, but also to do so in a cost-effective way that enables us to generate the appropriate amount of gross margin for the product. For those that don't know us, the markets that we operate in, are very data-centric. If you had to categorize Prophecy as a business, it's a data business, and we operate in the CX or customer experience market with eMight, and the security data management or SIEM XDR markets, security analytics markets with Snare. Both of these markets are very large global markets, and we have significant opportunity and significant total addressable markets with both these products. And we're very confident, given the customers that we've already secured for the business, that we can continue to make inroads into those markets and be very successful with both Snare and eMight. So eMight is often thought of as a visualization tool, but the secret sauce for eMight has always been in our ability to collect and aggregate data from multiple different sources. You can see from this diagram, we've got the dashboard in the center of that picture, but surrounding it is a number of different applications that customers use to deliver customer experience. Now, it may be the contact center software itself, as from Genesis or Amazon or Avaya or CX1 or whoever that may be, but there are a range of other applications that customers use, whether that's a ticketing system like Zendesk or CRM like Salesforce, or chat or chatbots, workforce management, surveys, transcriptions, sentiment, databases, Excel spreadsheets. There's a whole range of data required to be analyzed to optimize and improve customer experience for our customers. And it's our ability to get that data quickly, relatively easily, and correlate it and normalize it and bring it all together and map it together, which is really the secret sauce for eMight. So we are not a contact center reporting tool. We are a CX data integration tool with a visualization layer over the top. And we see a continued explosion of applications in CX. And we think that as that market continues to expand and even begins to automate, we see a huge opportunity where people are delivering things like chatbots, and you may move traffic from a contact center agent to a bot of some type, but you still need to manage and measure the effectiveness of your automations. And we see a huge amount of opportunity, regardless of whether a customer's inquiry is being taken by a human agent or a digital agent. It really makes no difference. I think the important thing for us in the last 12 or 18 months has been our launch of the integration platform as a service capability for eMite. This has massively expanded our ability to connect to those data sources. We are at present connecting to a new data source every week for customers, and we've already expanded away from our strong relationships with Genesis and Amazon into TalkDesk and Sprinkler and CX1 and Zendesk and many other applications. And we are continually being asked by our customers to integrate to more and more data. It's a thriving area of business for us, and this is the key enabler for us to expand our total addressable market globally into all of the data sources that customers are using to deliver CX, and even beyond CX into enterprise integration at some point. To touch on Snare, Snare is a security data engine, and this is becoming increasingly important in managing cybersecurity, in meeting regulatory requirements for international standards and for critical infrastructure regulation globally. I was recently at the RSA conference in the US, big cybersecurity conference, and one of the key themes to come out of it was everyone's got a dashboard, but nobody's got the data. So very similar to eMite, our secret sauce here is our ability to get data from any platform and to normalize that and bring that together for analysis, or to forward it to other areas for analysis or storage. We also have a very significant storage capability ourselves, which can save customers tens to hundreds of thousands of dollars in storing their long-term security data, which they need for both compliance and forensics. Again, Snare has a substantial global footprint with a number of names and a number of very substantial partnerships, and those partnerships are increasing almost on a monthly basis at this point. So our real strategy here for Snare is to scale through partnerships. And you've seen us sign partnerships with people like Devo and Carasoft and NovaCoast in the last 12 or 18 months. We have a pipeline of other substantial partnerships that we hope to announce shortly that will also drive additional revenue for the Snare business. And increasingly that is subscription revenue, as we've transitioned almost entirely away from perpetual licensing at this point. There are still a few older customers that are buying perpetual license and a few government customers that will buy perpetual, but almost all of our net new customers are going on to subscription. And as we're releasing new pricing and new capability, we have a program to bring our existing maintenance customers across onto subscription. And I expect over the next few years, you'll see our legacy maintenance number in our reported revenue go down and our subscriptions continue to increase. As a strong indicator of our partner-led growth strategy, we've announced a number of very substantial partnerships in the last 12 or 18 months. Devo is a great one that we continue to talk about. This is a SIEM or security analytics partner who have chosen Snare as their primary data collection engine. They turned off their own capability and turned on Snare, and we've rolled out over 100 customers now and over 140,000 endpoints. And we are starting to see the revenue slowly grow up from that relationship. It's a slightly different model for us in that we are we are charging on the amount of data that we send into the Devo platform, and that is probably slower than we'd anticipated, but still very significant upside for us. The Oracle partnership, we are the only Australian partner on the Oracle co-sell program, and one of only 4 or 5 in Asia Pac. We have a number of proposals out with customers with Oracle at the moment, and we're looking forward to our first deal closing with them very shortly. Carasoft is a substantial US software distributor, particularly with a focus on government, military and defence. A great partnership for us, and helping us not only access that market more effectively in the US, but helping us manage our large base of renewal customers in the US as well. And then, excitingly, the most recent partnership announcement we've put out in the last few days is our ISV Accelerate partner membership with Amazon AWS. The important thing about this is this now enables the Amazon sales teams to actually be compensated for selling eMight globally. And it's not just to Amazon Connect, their contact center customers. It's really to any customer that eMight is being sold to, regardless of whether it's Amazon Connect, Genesis, CX1, anyone on the Amazon platform. There is an incentive for the Amazon sales team to work with us and to help position and promote eMight into their customer base, and we can transact that through the Amazon marketplace. So we are really excited about this new phase of our partnership with Amazon. We've been a partner with them for a number of years now, but this is a new level of partnership where there is substantial incentive for Amazon sellers to work with our sales team to promote eMight into their customer base globally. So I think one of the things we have been very proud of over the last 5 or 6 years, we've had very consistent, steady growth of both top-line revenue, and increasingly that revenue has been recurring. Our strategy is to continue to deliver revenue growth and recurring revenue growth, and we are scaling through partnerships to enable that at this point. We feel that we've got a very strong business. We're generating cash. We have a strong global position from our sales teams. We've got great partnerships, and we have very strong tailwinds in both of the markets that we're operating in at the moment. So I think from an outlook perspective, myself and the team are incredibly excited about our opportunity globally. And I think even if you look at some of those logos on this last page, we've got a number of new geographies that are opening up to us. So Emirates National Development Bank is obviously in the United Emirates. Eva Air is our first Taiwanese customer. We are continuing to expand our footprint globally, and we're really excited about the future. So thank you. I'll stop there, Ed, and I'll hand that back to you.
Very good. Thank you for that, Brad. Before we move on to the formal matters, do we have any questions that have come through the inbox, Grant?
Yeah, we've got one question that's come through, sort of through Brad's presentation. So one for Brad to answer. In October 2021, Prophecy announced its largest deal ever with Humana. It was valued at approximately 1.8 million per annum. The deal was due to finish in 3 years. Will it be renewed?
We're working with Humana at the moment. They're still under contract for now, and we are working through the renewal process. And at this point, I can't confirm whether it's going to renew or not.
Any others, Grant?
Another one's come through. Another couple coming through, Ed. I know there is a delay in Devo paying you. How much have they paid you so far?
Not nearly enough, quite honestly. So this is a brand new pricing model for us, in that normally we charge for Snare based on the number of endpoints. So if you have 1,000 servers, we sell you 1,000 agents at a particular price depending on the level of capability that you're buying. With Devo, it is different in that we are being paid based on the amount of data that our agents and our systems send into the Devo platform. The number one challenge for us in that scenario is actually getting the software deployed, because that's out of our hands. So either a third-party partner or the customer themselves has to deploy our agent, then it has to start sending data into Devo. So we currently, getting about $10,000 a month out of that agreement, but we expect, given the amount of data that each of these customers will generate, that will increase to 1.6 based on the customers that we've already deployed, and we have visibility of around about another $1 million more from customers that are yet to deploy. So it is slow, but the potential for that relationship is still very substantial.
Yeah, which sort of a follow-on question from that. Devo Car was previously disclosed at 2.6 million, but it is now 1.6 million. What is the cause of this?
Some of that was deals that we were told that were closed that Devo didn't close.
And then sort of just a general question around ARR. Hi team, can you explain simply what contracted ARR actually is?
So contracted ARR is when we have secured a contract with an end customer, but we may not have started invoicing it yet. So, a great example may be something like a Genesis customer where we sign an agreement for, $100,000 per annum, but there could be a 6-month ramp period given by Genesis to lead up to them starting that contract. So we can say that we've secured a $100,000 agreement, but we actually don't start invoicing that for 6 months. So it's an indicator of future revenue, but we don't necessarily start invoicing that straight away. So the invoiced ARR is really what falls into our financials, and you'll also see that in our income in advance or deferred income. But the contracted is an indicator of contracts that we have secured, but have not necessarily started invoicing or recognising revenue from yet.
A question from our Q1 update, Brad, from a shareholder. I've been a shareholder for probably about 6 years. My first question is, why did the cash balance drop considerably in the first quarter of 25? I've not seen the cash balance dip below 10 million for a few years since the capital raise.
Well, there's a couple of reasons. One, we always tend to have all of our annual payments hit us in the first quarter. And we also have a number of our larger customers that we don't invoice until the second half. So there has always been a seasonality between what we're paying out in expenditure and what we're collecting in invoicing. But we've also been investing in the re-platforming and re-architecture of the eMite application or applications, and that has involved some investment in third-party and additional resources to accelerate that development. We've announced that previously that we're making those investments. So that's a cash outflow that's probably hasn't been usual in our expenditure in the last couple of years.
Yeah. Just a broader question, I suppose, on just the snare and the cyber security market. Has there been much consolidation happening in the cyber security space? What are you sort of seeing in the segment, Brad, from one of the shareholders?
It sounds like that's somebody who knows that there's a lot of consolidation in the cybersecurity space. Look,
they were suggesting maybe there's not, that it's quite dislocated. So.
Well, yeah, the cyber market is, apart from the fact that it's massive and very competitive, if you look at the top end of that market, and we often partner with these top end players, the first real stone to fall was when Cisco bought Splunk about 9 months ago. And then following on from that, we've seen a number of other changes. So, Logarithm and Exabeam have merged to form a new Exabeam company. We've seen IBM sell their QRadar cloud customers to Palo Alto. There's been a number of attempted transactions between other players. You know, there's big players in the market like Wiz that look like Google's going to acquire them, and then that stopped, and now they're looking at some other merger. So yeah, there is a lot of movement in that cybersecurity market, and you know, big players, whether they're a Palo Alto or a Cisco or a Splunk or a CrowdStrike, are constantly adding capability, looking to expand their footprint inside their customer base. That's not to say that there isn't a play for us. I think we have a very strong play in being that very comprehensive data engine. As I said before, lots of these players have got great dashboards and even purport to have great AI engines, but many of them don't have the data they need to actually generate significant value for their end customers. Ultimately, the data is the oil that drives these security engines, and we're the provider of that oil. You know, there are other players in the market that do what we do, some bigger, you know, many smaller, but we have a very strong product offering. We have strong brand recognition in the market. We just need to get in front of more customers more often.
Yep. So I suppose sort of a follow on from the Devo questions that we already had. I suppose the question, I thought the Devo deal was 5 million in ARR. Is the amount from Devo now 1.6 million, expanding to 2.6 million? So maybe, I suppose, just to outline to the shareholders, maybe just the broader Devo picture.
Yeah. So Devo has, we are the only endpoint data provider for Devo, and they are providing us to their customers at no cost to the customer. So it's not a traditional reseller partnership where we're relying on Devo to go and sell Snare to the end customers. They have turned off their endpoint capability and turned on Snare as their endpoint capability. The intention of this partnership is for Snare to become the endpoint data collection solution for every single Devo customer, existing and new. Devo has approximately 400 global customers today. We have rolled out approximately 120 of those customers. Some of those are very big, customers like Nielsen, like Trustwave. Others are very, very small. So there is a range of customer sizes in those 120 customers. And those 120 customers today, we expect them to generate approximately 1.6 million per annum. So you can do the math. You can say, well, 120 customers for 1.6. There's a total of 400 customers that we expect to get the vast majority of. So if you multiply out the average amount of revenue we're getting per customer by 400, then we're still getting to somewhere in the vicinity of $5 million. So that is the total expected amount. It may just take us a bit longer to get there than we expect at the start of this relationship.
And so another question from Devo. Devo's obviously popular. As far as that, the revenue and then, dropping then to the bottom line from a profit point of view, what do the hosting costs look like for Devo? With obviously
zero.
Revenue coming in versus hosting costs?
We've got no cogs at all on Devo. We're only providing endpoint data collection capability. Devo's doing all the hosting. Our software gets deployed on the customer's premise.
So from a cash point of view, so as we already spoke about, cash was at a low point at the end of Q1. Where are we expecting it to be, I suppose, for the first half based on sort of current information?
We've had some very good invoicing this month. So we're expecting good cash collections in December. I don't have the cash forecast in front of me. I might throw that open to the rest of the board. Ed or Grant, have we got a...
Yeah, no, definitely. We are expecting it to be higher than Q1, definitely, yes. As Brad said, with good invoicing through the December quarter or Q2, assuming those customers all pay on time, which we're sure they should, no reason why they shouldn't, we should see that cash position improve from what we reported at the end of Q1. Still got a couple more here. performance of the US sales team. Sort of, what's your sort of feedback on that? Are they performing to the level that you would like, or what are we doing to improve performance of the sales team in the US?
I'm not sure I know any CEO or sales manager who's got a team that's performing to the level that they'd like. Look, we've got some super high performers in the business. There's no question about that. But we also have some areas where we need to improve. In the last kind of 9 months, we've refreshed the eMite sales team in the US, and they're really starting to hit their straps now. We've got a very strong pipeline of great new opportunity, particularly on the back of our integration platform capability coming out of the US. We should start to see that, hit the books particularly in the second half. The snare team at the moment is down to, basically a skeleton operation. We have probably the bare minimum number of salespeople we really need in the US right now. And I have something like 4 or 5 interviews next week for a new VP of sales for snare in the US. So we're actively looking to boost the snare sales business in the US, as quickly as we can. Most of the great activity that's happening at the moment is happening with our partnerships. And as I said, we have some very significant new partnerships we hope to announce shortly. But I'd love to get some more feet on the street in the US, and I'm hiring a new sales VP there to really rebuild that team for us.
A couple of questions probably for Ed. So with the misreporting around ARR, which we've obviously updated the market on recently, and some of our hosting costs, I think, as Brad talked about in his presentation, increasing higher than what we would have liked in the 24 year. I suppose the question coming in is, from a qualified CFO or into org chart, Ed, around some stronger financial skills required.
Oh, look, no, I mean, that's been raised a number of times, and we've certainly taken note of that. And there are some activities on the go that will, in the end, hopefully add to the resources that we've got.
Yeah, I think maybe I can add to that too as well, Ed, is, definitely we had a very lean finance and administration team. We did bring a senior person into that team during the 23-24 financial year. But yes, obviously he had to come on board and support the team and learn the business. So wasn't able to make an initial impact, but is now very much into his second year and having a significant impact. And we're currently advertising for another sort of resource in that support to better support the F&A team at a lower level. So I agree with Ed. We are conscious of that. Obviously, Brad spoke about in his presentation about our investment in improved technology to be able to better manage that. So, from a board point of view, we're very aware that we need to look at areas of improvement in that and sort of taking the actions required.
I mean, I think the key step is the introduction of the automated systems, the Maxio system, because all of that ARR calculation was a total manual process, and those errors crept in a number of years ago. It was only the work being done to get ready for the new system that unearthed some issues. And then once that happened, we did a check across basically every transaction to just make sure the data was clear. So certainly in the perfect world, you'd hope nothing like that happens. But we're humans and mistakes get made at times. But none of that affected any of the financial numbers. So every single number on the actual accounting side, the financial side, is totally correct.
Then a question from Cashflow, and I suppose, Ed, coming back to a couple of one resolution that we have on every year is, if we're expecting to continue to be cash flow positive, why do we need the ability to be able to raise additional capital which is obviously per Resolution 3. It sounds like there's some doubt will be cash flow positive. Maybe you just want to talk to why we always have Resolution 3 in there.
Oh, yeah, look, that's been a permanent thing for a number of years. And if people look back, typically we've raised cash to do with acquisitions, and certainly we continue to look out to find other companies that could add to our portfolio. And typically in that sort of scenario, a fair amount of pro shares would get issued if we had the right acquisition. So really that's the main reason for it. And in the end, it just helps us in the middle of the year. If we had an acquisition where we need to issue more than 15% of our holdings, we could do that without going to an EGM in the middle of the year. So really, it's just something to reduce the bureaucracy. And it's no different to what we've had for as long as I can remember now. We've had that as a resolution.
Yeah, no, exactly. Not yeah, we have it there. Yeah, it's really for any M&A activity, not to fund day-to-day cash flow of the business. So we're not putting it in on the basis of any working capital requirements.
I'm not sure we've actually ever used it as well, to be honest.
Even when we raised back in 21, Ed, I don't think we used it.
Yeah, so it's just there as a backstop, but it potentially just saves us a bit of bureaucracy if we need to go more than 15%.
Yeah. I suppose being we're in the cybersecurity industry, Brad, probably a good question from a shareholder as far as our own internal security requirements, to protect things like our cash at bank. Shareholders raised here that you hear lots of stories in the press about cyber attacks and leakage or money coming out of bank accounts through cyber attacks. Our comfort around our protection of cash and those sort of assets.
Yeah, look, and I think it is absolutely critical. And as a security company ourselves, we take that very, very seriously. We have a dedicated cyber function inside the business. We have a senior executive who is the CISO of the business and is responsible for security of not only our business, but all of our customers, particularly on the eMite side. We are hosting customers' important data on a daily basis. Literally can be hundreds of millions of records for customers. So cybersecurity is absolutely important, and we take it very seriously. And we can demonstrate how seriously take it through some of the compliance requirements that we've achieved and maintained. So there's a global ISO certification 27001. We've been ISO certified now for a number of years and have recently just been recertified as ISO compliant. And so what does that mean? It means that we have met a very comprehensive set of security controls, policies, processes, procedures, and have people dedicated and responsible for cybersecurity in the business and maintaining those controls and that security posture. On the eMite side, we've also just recently achieved SOC 2 compliance, which is a higher level of compliance, again, particularly for cloud-hosted services, which is really expected in the global SaaS industry today for you to be SOC 2 compliant. And again, for a small company, achieving these levels of compliance involves a significant amount of work, a significant amount of resource, and systems and processes and tools and policies. And we're very proud and pleased at the level of security compliance we have, but that's really an indicator of just how seriously we take security. And for much of what we do with Snare, we are helping our customers achieve the same levels of security compliance that we can achieve ourselves. So yeah, it's super important, and one thing many small businesses struggle with.
Yeah, good. So a couple of others back on the Humana one. Actually, when does the Humana contract end, Brad?
It's the end of Q3.
End of Q3. Thank you. Then another broader question. Given the current enterprise value, if the company was only slightly profitable, the market cap would be much larger. The market currently does not believe that Prophecy can be profitable. What do Brad and Ed think about this? Given the share price performance has been flat over a long time period, should there be a change of focus to profitability versus revenue growth?
Look, we've been focused on revenue growth the last number of years, and we think that's really important. I mean, we're trying to build the business, and we've been successful at that on both the snare and the EMITE side. The ARR has been growing over the last 3 years by pretty decent amounts. And we'll end up with better economies of scale with a larger business. Brad just mentioned, for instance, all of the security stuff. I mean, to achieve all those compliances, all of that is a costly exercise, and it's the same base cost, whether it's for a $10 million revenue or a $40 million revenue. So we're pretty clear that we want to grow our revenues, and that will bring us to profitability. The other thing to take note of is, because virtually all the business is subscription service, we don't get to take it all to revenue on day one of an invoice. It sits up there in income in advance. So sure, from an accounting viewpoint, strictly speaking, we've made a set of losses. From a cash flow viewpoint, across the 12 months, we're running at a break even on cash flow. So people seem to ignore that, but I think it's pretty important, the fact that you can run break even. So look, that's been our focus, and we think it's the right focus. Certainly it doesn't meet every investor's requirements and hopes in the short term, but we're trying to build a bigger business for the longer term.
Yeah, and I think one of the questions that came through was sort of our internal incentive schemes. I suppose in line with that strategy, the bulk of our incentive schemes are around revenue, aren't they, Brad, for the sales team and sort of our senior members of our team?
Yeah, correct. I think if you look at our key man report in the annual report, most of the people with large amounts of incentive next to their name have got sales targets that they're covering as well, and they're mostly commission payments for senior salespeople, VPs of sales, many of whom are not just sales managers but have their own sales targets as well. But that's where the vast majority of our incentives are focused.
And yeah, just to close out on that Humana one, so I've talked about it closing at the end of Q3. Just a query. Obviously, it's a key focus of yours and the team to try to manage that renewal. Absolutely.
Look, and I think every single one of our large customers gets significant account management, and we definitely want to keep all of them for the long term. The key for the long-term sustainability of the business is for us to have a strong pipeline of new customers as well as existing customers. And at some stage, customers drop out for whatever reason, and they're not all going to stay. But we're doing everything we can to certainly make sure that we maintain all of our large customers.
Good. And the last one is just a thank you from one of the participants, thanking Brad and the team for the quarterly reports that are coming out to the market, to keep the market updated on a regular basis with how we're tracking, obviously outside the annual AGM. But I know, Brad, you make it a focus to get those quarterly reports out as soon as possible.
Yeah, I mean, it's tough, right? Because we are a small business. Most of us are wearing multiple hats in the business. It's not like we have a dedicated IR team. You're looking at him here. So we do everything we can to try and keep the market updated with as much news as we can share. when it's appropriate to share it. And you should be looking forward to news flow from us probably over the next few months with some good announcements as well.
Then just a question on the correction to ARR. Did anyone receive bonuses based on the higher ARR? If so, were the bonuses returned? No, we don't pay any. None of our incentives are based around ARR. The majority, if not all of our incentives are only paid when we've actually received the money and the cash is in the bank account. So, either the signing of contracts, the invoicing of customers, until we've actually received the cash into our bank account and the debtor is paid, do any of our team actually get paid their incentives, Brad?
Yep, correct.
Is that the last question?
One more.
You said that 5 times.
I have. They keep appearing, Ed. There were rumours that PRO was a takeover target. Do you have any comment on that, Ed?
Hey, look, I'll tell you what, we do get approaches from people from time to time, and if anything ever got to the stage of being a sensible approach, then we'd definitely follow it through. But there's nothing on the table at the moment, but we have had approaches. We always have over our history, and typically they're a little bit of nonsense, to be honest, from what I've seen. So there hasn't been any approach out there that would be a sensible offer to put. Well, in fact, there haven't been any real offers, but there have been approaches of people say they're interested. And who knows? One of these days there might be a decent one, but we just get on with business.
Good. I think that was all, Ed. That was good. Thank you to everyone for your feedback. That was great to have those questions and be able to hopefully give answers that made everyone comfortable.
Well, agree. I thank you for myself. In listening to most of the questions coming through, I thought to myself, that is the most number of questions I can ever remember, and the most sort of comprehensive coverage across a whole lot of topics. So appreciate the input from everybody. That's good. Okay, we now need to move on to the formal matters of business as set out in the notice of meeting sent to the shareholders. I'll just start by quickly repeating our voting procedures. Voting today will be conducted by way of a poll on each item of business. Shareholders who have already submitted proxy votes are able to change their vote on a poll via the online platform. Each shareholder, whether voting in person, by proxy or by representative, is entitled to 1 vote for every share held by that member. Where a proxy vote has been given to the chairman without voting instructions, I intend to vote in favour of each resolution. If you're eligible to vote at the meeting, a vote icon will appear. Selecting this icon will bring up a list of resolutions and present you with voting options. To cast your vote, simply select one of the options. There is no need to press a submit or enter button, as the vote is automatically recorded. You do have the ability to change your vote up until the time I declare the voting closed. And just a reminder, the board strongly recommends that you vote for each of the resolutions. The minutes of the previous AGM held on the 17th of November 23 were approved by the board and signed by me in accordance with the provisions of section 251A of the Corporations Act. These minutes are tabled and there are copies available for inspection should any member wish to see them. And if you want to do that, contact Grant, our company secretary. Okay. The notice of this shareholder meeting was made available to all shareholders as required by the Corporations Act on the 28th of October 24. And unless there are any objections, I'll take the notice as read, sorry. Okay. First topic is financial reports. I informed the meeting that the company's financial report for the year ended 30th of June 24 was lodged with the ASX on the 27th of September 24, and a copy of the annual report was sent to those shareholders who requested a hard copy. Please note that Adam Aladen from our auditors, Grant Thornton, is present if anyone has any questions. Are there any questions or comments regarding the financial reports? So just give a little pause and see if we get any questions. I suspect most of the questions have been asked.
Yeah, no, nothing's coming through on chat on the annual report, Ed.
Okay. I'll now move on to the 4 resolutions. So the resolution 1 is the re-election of Grant Miles as a director. The board advises that in accordance with the constitution of the company, Grant Miles retires automatically at the conclusion of this AGM, but being eligible, he is willing to continue as a director. The board endorses Grant Miles continuing as a director. I now move the motion to consider, and if thought fit to pass, with or without amendment, the following resolution as an ordinary resolution. That Grant Miles, being a director of the company, retires at the annual general meeting of the company and being eligible, offers himself for re-election, is re-elected as a director. We have received proxy votes that vote 99% in favour of this resolution. Are there any questions on this matter? Just do a slight pause. Not. I'll now put the motion to a vote as an ordinary resolution. You're invited to lodge your vote for resolution 1 by using the vote icon. Okay, resolution number 2 is to adopt the remuneration report. This is a matter on which the views of the shareholders are to be taken as guidance by the board. Under the Corporations Act, listed companies are required to include as part of their directors' report a remuneration report which includes specified performance information. Includes specified information. The directors have prepared a remuneration report as at 30th of June 24, and it's included in our annual report on pages 16 to 22. Please note that the key management personnel of the company, including directors and their closely related parties, are excluded from voting in any capacity on this resolution as set out in the notice of the meeting. The Corporation Act also requires companies to put to shareholders a non-binding vote to enable shareholders to voice their opinion on matters included in the report. So I now move the motion to consider, and if thought fit to pass, with or without amendment, the following resolution as an ordinary resolution. That the company adopt the remuneration report for the year ended 30th of June 24 as set out in the company's annual report for the year ended 30th of June 24. The proxy votes show that 90% of the votes are for this resolution. Are there any questions or comments on this resolution? Do a slight pause.
No, nothing on that one, Ed.
I'll now put the motion to a vote as an ordinary resolution. You're invited to lodge your vote for resolution 2 by using the vote icon. Okay, resolution number 3 is for the approval of a 10% placement facility. As this is a special resolution, I remind you that it needs to be passed by at least 75% of the votes cast by shareholders at this meeting, either in person or by proxy or by attorney, and entitled to vote on the resolution. I now move the motion. This one's a bit of a mouthful. To consider, and if thought fit to pass, with or without amendment, the following resolution as a special resolution. That pursuant to and in accordance with Listing Rule 7.1A, and for all other purposes, shareholders approve the issue of equity securities up to 10% of the issued capital of the company at the time of the issue, calculated in accordance with the formula prescribed in Listing Rule 7.1A.2 and on the terms and conditions in the explanatory memorandum. Whew. Proxy votes so far show that 86% of the votes are for this resolution. So that would get across the 75% threshold. Are there any questions or comments on this matter? I had a question earlier, so I think we're probably covered on it. I'll now put the motion to a vote as a special resolution. You're invited to lodge your vote for resolution 3 by using the vote icon. And then resolution number 4 is also a special resolution, needs to be passed by at least 75% of the votes cast by shareholders at this meeting, either in person or by proxy or by attorney, and entitled to vote on the resolution. A proportional takeover bid is a takeover bid where the offer made to each shareholder is only for a proportion of the shareholder's shares. Pursuant to section 648D of the Corporations Act, an entity may include a provision in its constitution whereby a proportional takeover bid for shares may only proceed after the bid has been approved by a meeting of shareholders held in accordance with the terms set out in the Corporations Act. In accordance with section 648G(1) of the Corporations Act, such a provision will cease to apply 3 years from adoption or renewal as appropriate unless otherwise specified. Oh, right. Proxy votes that are in the system so far show 99% of voters have voted for the resolution. So I think that one's over the 75% threshold. So I now move the motion to consider and if thought fit to pass with or without amendments, the following resolution as a special resolution, that for the purposes of sections 1362 and 648G of the Corporations Act and for all other purposes, approval is given for the company to modify its existing constitution by reinserting Rule 162 in the form set out in Annexure A. So everyone is invited to lodge their votes for Resolution 4 using the vote icon. So that concludes the 4 resolutions to be voted on. I'll shortly close the voting system, so just make sure you've casted all your votes across the 4 resolutions. Now, while we're voting for anyone to conclude their voting, any other questions in the system, Grant?
No, nothing further, Ed.
Okay. Okay, in that case, I declare that the poll is now closed and formally charge Mr. Edwards as the returning officer to count the votes. The results of the poll will be released to the ASX during the course of today. But from the proxies, it looks like they've all got up by a fair margin. Okay, well, that concludes the formal business for today. Thank you very, very much for attending, and thank you for all the questions, as we said earlier. It's been a longer session than normal and a good one in terms of questions being raised and discussed. So thank you again, and I'll now declare the meeting closed.
Thanks, Ed.
Thanks, Ed. We'll end the webcast there. Thanks, everyone. We'll see you next time.
Thank you.